The market's flashing red. The Nasdaq just plunged 500 points. The IMF just warned of a global debt tsunami. The World Bank predicts stagflation, and central banks are quietly hoarding gold. If you're not prepared for the 2025 economic collapse, you could lose everything. Look, I get it, the headlines are scary. You work hard for your money and the last thing you want to see is your portfolio vanish overnight. But here's the good news, it doesn't have to be this way. Today, I'm going to reveal the 7 assets that will not only protect your wealth, but could actually help you thrive during the coming crisis. These aren't some get-rich-quick schemes, but time-tested strategies used by the wealthy to weather any storm. So, buckle up, hit that subscribe button, and let's dive in. Let's talk about gold. Now, I'm not talking about some digital token or a promise on a piece of paper. I'm talking about real, physical gold you can hold in your hand. See, central banks understand something most people don't. Gold is the ultimate safe haven asset. Don't just take my word for it. In 2024 alone, central banks bought a staggering of 700 tons of gold. And in 2023, this was 1,136 tons of gold. That's a 60-year high. They're not buying it for fun, they're buying it because they know what's coming. Gold is a tangible asset with intrinsic value. It can't be printed out of thin air like our fiat currencies, and it's held its value for centuries, even during times of economic turmoil. Now, silver is gold's little brother. It's more volatile, but it also has industrial uses, which means it could see even more significant gains if supply chains get disrupted. When the system crashes, you want assets that have stood the test of time. And that's exactly what gold and silver have done. Now, how do you invest in this? It's simple. Allocate about 10 to 15% of your portfolio to physical gold and silver. And when I say physical, I mean it. Don't bother with ETFs or paper gold, you want the real deal. Look for sovereign coins like US Eagles, Canadian Maples, or Krugerrands. These are universally recognized and easy to liquidate if you need to. Now let's talk about something a little more digital. I know what you might be thinking, Bitcoin isn't that risky. And yeah, it can be volatile, but remember what happened in Cyprus back in 2013 when their banking system collapsed? Bitcoin surged 500%. Look, the world is changing. We're moving towards a digital future, and decentralized digital currencies like Bitcoin and Ethereum are here to stay. In fact, BlackRock, the world's largest asset manager, started Bitcoin ETF. This is huge. It shows that institutional investors are finally taking crypto seriously. But here's the key, this isn't about getting rich quick, it's about diversification. Bitcoin and Ethereum are like digital gold. They can act as a hedge against inflation and a store of value when traditional markets tank. So, how do you get started? Simple. Dollar cost averaging. Don't try to time the market. Just invest a small amount every week or month regardless of the price. And most importantly, make sure you control your own keys. Don't leave your crypto on exchanges. Get yourself a hardware wallet like a Ledger or Trezor. It's like a digital Fort Knox for your crypto. Let's talk about something everyone needs: food. We saw food inflation hit a staggering 11% in 2023, and with supply chain disruptions and climate change, things are only going to get more volatile. This is where farmland comes in. Farmland is one of the oldest and most reliable investments in history. It's tangible, it produces essential goods, and it's historically been a great hedge against inflation. For over 2 decades, farmland returns have consistently beaten the S&P 500. Now, I understand not everyone has millions lying around to buy a farm. But that's okay. You can get started with as little as a few $100s by investing in agriculture ETFs. These ETFs invest in a basket of farmland, agricultural companies, and fertilizer producers. It's a great way to diversify your portfolio and get exposure to this essential asset class. Some of my favorite options include Farmland Partners FPI and the Global X Fertilizers ETF, Soil. These are just 2 examples, so do your own research and find what fits your risk tolerance and investment goals. Look, even in a recession, people still need certain things. They need toothpaste, toilet paper, and over-the-counter medicine. These are called consumer staples, and they're the backbone of a recession-proof portfolio. Companies that produce these essential goods tend to weather economic storms better than most. Think about it, even if you lose your job, you're still gonna brush your teeth, right? Now, I'm not saying these stocks are going to make you rich overnight, that's not the point. The point is to protect your capital and generate some income during times of uncertainty. A great example is Procter & Gamble. They own a massive portfolio of household brands like Tide, Crest, and Gillette. These are products people use every single day, recession or not. Another option is to invest in a consumer staples ETF like the Vanguard Consumer Staples ETF. This gives you broad exposure to the sector without having to pick individual stocks. Swiss franc and Singapore dollar seeking safe havens abroad. Let's face it, the US dollar hasn't exactly been a beacon of stability lately. That's why it's crucial to diversify your currency risk. And two of the safest, most stable currencies in the world are the Swiss franc and the Singapore dollar. The Swiss franc has long been considered the gold standard of currency stability. Since 1971, it's appreciated over 300% against the US dollar. Switzerland is known for its political neutrality, sound fiscal policies, and robust banking system. Singapore, on the other hand, boasts a AAA credit rating and a highly diversified, export-oriented economy. They've got a stable government, a strong rule of law, and a business-friendly environment. Now you might be thinking, how do I actually invest in these currencies? Well, it's easier than you think. You can open a multi-currency account with companies like Wise or Interactive Brokers. This allows you to hold, exchange, and even invest in different currencies. U.S. Treasury bonds, tips, fighting inflation with Uncle Sam. Even in an economic crisis, you still want some exposure to bonds, but not just any bonds. I'm talking about Treasury inflation-protected securities, or TIPS for short. These are U.S. government bonds that are specifically designed to protect your savings from inflation. Here's how they work. The principal value of a TIPS bond adjusts with inflation, as measured by the Consumer Price Index, CPI. So, if inflation goes up, your principal goes up, and if inflation goes down, your principal is protected. Plus, you still earn interest payments on that adjusted principal. Skills and community, your ultimate safety net. Look, I've given you 6 tangible assets to help you navigate the coming economic crisis. But the most important asset of all? It's not something you can buy or sell, it's your skills and your community. In times of crisis, it's not about how much money you have in the bank. It's about what you can and who you can on. Think about it. What happens when the grocery store shelves are empty, or the power goes out? Money might not be worth much then. But knowing how to grow your own food, fix a leaky faucet, or barter for goods and services, those skills will be invaluable. So what can you do? Start by learning a new skill that would be useful in a crisis. Maybe it's gardening, basic carpentry, or even something as simple as learning how to sew. And don't underestimate the power of community. Get to know your neighbors, join a local gardening club, or volunteer at a food bank. Remember, a strong community can weather any storm. And a community with valuable skills, that's unstoppable. Start small. Stockpile some non-perishable food, basic medical supplies, and essential tools. Every little bit helps. The economic fallout: be prepared, not scared. We've covered a lot today. From gold and silver to farmland and crypto, we've explored 7 powerful assets that can help you not just survive, but thrive during the coming economic crisis. But remember, this isn't about timing the market perfectly or panicking about every headline. It's about being prepared. This is a marathon, not a sprint. Start small, stay diversified, and most importantly, ignore the noise. Tune out the fear-mongering and focus on what you can control: your finances, your skills, and your community. Until next time, this is Anup Elias for. Stay safe, stay prepared.